2 weeks ago, it literally was business as usual. Properties were selling at asking or above asking consistently.
And then COVID just kept getting, hitting harder and harder. And we started getting more and more news. People started freaking out.
Now we're starting to see a little bit of a softening where properties are selling at asking or just a hair below. You can't do real estate now, or that real estate's inherently a bad idea, or that it's just impossible to actually transact in real estate if you want to. And I thought it would be really important for the audience just to show, like, we can actually do a lot of our due diligence from home.
At this point, it's my turn to kind of walk away. And that's a really hard thing for me to do. It's actually one of my biggest downfalls. And also one of my key success factors is that I don't really quit.
What is up, YouTube? Matt McKeever here, and in today's video, myself and Kellen sit down and analyze some real-life deals. We're trying to make the most of self-isolation and quarantine during these uncertain times, and what better thing to do than just analyze deals virtually? Now, this is a limiting belief I'm coming across quite frequently these days in the comments section on my social media posts. It's important to understand that even though we may be self-isolating, we can still, in fact, look at real estate and do deals virtually. I mean, it's 2020. The future's here today, guys. So in today's video, it's part one of a three-part series where myself and Kellen, we show you exactly how we go about analyzing a deal virtually without ever leaving the comfort of our homes. I know you guys are going to enjoy this video, so smash that like button, hit the subscribe button if you're new to my channel, and for the regulars on my channel, this is it. This is the meat and potatoes that you guys always want. Let's dive into it.
What is up, YouTube? Matt McKeever here, and in today's video, I'm going to be joined by my buddy Kellen. He's the co-host of the OnFIRE podcast. That's the podcast that we sometimes do, but not really that much anymore. And we figured let's really provide some value while we're under quarantine, self-isolating, and social distancing. We're both real estate investors. If you're not familiar with Kellen, he's actually been on the YouTube channel in the past. So I'd really encourage you to watch his backstory. And he really even broke down for us exactly how his portfolio has evolved over the last few years. He's now at the point where he's financially independent, he's retired early, and just a full-time real estate investor. I'm really excited to have Kellan on. And in today's video, we're really just going to analyze deals from the comfort of our home. So we have no interest in getting COVID-19, so you don't have to worry about that. And we're going to show you guys exactly how we'd approach analyzing deals in these uncertain, high volatile times. So here's Kellen. Hey, man, how's it going?
Good. How about you?
Good. So really excited here. And yeah, if you don't mind, maybe just give the audience a little bit of context. I know you've been on the channel a few times now, but
yeah. Oh, just about myself?
For who Kellen is, where you're at in life, all that good stuff.
Yeah, sure. Yeah. So I did computer science for my undergrad, and then I left my hometown and moved to London. And I've been here for 7 years or so. Basically, I was working in the tech field and just saving up money, living quite frugally. I ended up saving around a little over 100,000, probably around 120,000 or so. And then I was able to take that money and put 5% down on my first duplex, lived for free there, and then started kind of just churning through and building and burrowing my way through to financial independence. So it took me about 2.5 years to get to 32 units. And that was the point where I was like, I'm done. I'm ready to quit the day job. Left the day job, actually got laid off and got severance, which was perfect. And then went on a van trip for 3 months with my girlfriend, Angie. And now we're back, and now we're not able to hit the road anymore. That's for sure. Definitely not touring around the States right now.
Yeah. And so, right now, there's a lot of what I find to at least be misinformation or confusion or assumptions that people are making that, like, you can't do real estate now, or that real estate's inherently a bad idea, or that it's just impossible to actually transact in real estate if you want to. And I thought it would be really important for the audience just to show, like, we can actually do a lot of our due diligence from home. And in fact, I think you and I probably have a preference to first do a bunch of due diligence at home because we understand how the internet works. Yeah. And then we can always then fill in the blanks by being there in person, or potentially, doing FaceTime calls or Skype calls or Zoom calls with a tenant or the actual owner of the property. They can walk through it for us. Yeah. There's a lot of creative solutions to these unusual times.
Yeah.
So I guess my first question, Kellen, is, are you still paying attention to the real estate market whatsoever?
Yeah, I am. I guess part of my challenge right now is I had a deal that was under contract that I was ready to pull the trigger on, and I was pumped about it. And then COVID just kept getting, hitting harder and harder. And we started getting more and more news. People started freaking out. And I was like, and it wasn't so much out of fear, but it was just like, look, I understand that this is going to have some form of significant economic impact. I can't really predict what that may be, but I can't, in all confidence, go forward buying as if nothing is happening right now. So I didn't think it made sense to buy based on early 2020 values. So I decided, you know what, at this point, it's my turn to kind of walk away. And that's a really hard thing for me to do. It's actually one of my biggest downfalls, and also one of my key success factors is that I don't really quit. So it takes a lot of effort for me to say, you know what, I'm going to close that door and walk away. But more and more recently, I've been kind of trying to work on that. And this deal was one example of that. It just didn't seem to work out for me. And now, as other deals pop up, I keep finding myself comparing it to the deal I just walked away from, because if it's not as good as the deal I just walked away from, then why would I go forward with it? And I think what I'm struggling with right now is obviously no one knows what's going to be happening right now.
Mm-hmm.
And therefore, I'm in a place where I think if properties do go down significantly in value in some, in the near future, in the next 12 to 24 months, I want to definitely be in a cash position ready to take advantage of that opportunity. But at the same time, it's like, do you ignore deals right now that do seem like they're good? And I think for me, at a high level, I would say it would have to cash flow from day one, and ideally significant value add, and ideally significantly under market value. So those would be my three main criteria in terms of buying anything at this stage in the game, because I don't want to be losing money every month and then have tenants not be able to pay their rent and lose even more money. And then values drop and me potentially not be able to refinance the money out, or maybe be upside down on the loan or whatever it may be. So I think those are my three main criteria right now. The more I talk it through, I'm realizing that's what it might be.
And so do you mind sharing with the audience just the basic details of what that deal that you decided to put on pause or leave for now looked like?
Yeah, sure. So it was a sixplex, and it was actually sort of a pseudo wholesale deal that I was working on with you guys, actually. And I sort of ended up kind of taking it on the side and trying to make it work. And I did get, I had it under contract. I had it ready to go. And I'm not sure how much detail you want me to get into on it, but it was under market value, but it would lose money every month as it stands. And that isn't comfortable to me with the current market situation. And at the time, we hadn't had any notice from the government about the $2,000 that everyone's getting by clicking 3 buttons on the Canada.ca. So it was a real question as to whether people are going to be able to pay their rent or not. Turns out, so far, at least in my situation and a lot of investors I know, they haven't really been hit hard yet. There's been certain situations, which is just to be expected. So things have so far turned out to be a little bit better, but we know that, this can't, I'm not a macro economist, but we know that this isn't something that is, the government can't just hand all this money out and then everything will be fine. Like there's going to be results that come out of this. So I think you've used the term kicking the can down the road. And I think that maybe that's possibly what we're doing right now. It's hard to know whether this is something that's going to help us really ride through this and come out the other side, or whether we're just going to get hit even harder. I'm not sure, but yeah, anyway, so in terms of the deal, I just decided I couldn't buy something that would lose money every month right now.
Mm-hmm.
Especially, and that's even if everyone pays all their rent. And also I can't buy it based on my criteria as of early 2020. So even though it's under market value, I always bought under market value. So now I need to buy even further under my own previous set of criteria. That's kind of how I'm mentally viewing this right now.
Yeah, no, really appreciate the context. And I think it is really important for audience members to understand that it's such a dynamic situation that I think a lot of us investors are literally changing our criteria, if not on an hourly or daily basis, certainly a weekly basis.
Yes, absolutely.
So for myself, I know I'm really trying to get dialed in on the data, leave the drama at the door, because there's so much misinformation. Like, man, if I was to just take every YouTube comment I get these days at face value, it is literally the end of the world. We are going back to the Stone Age. Real estate will have no value. da 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 da.
And it's tough too, because, we're talking about data versus drama, and, we know that data can be affected by emotions. That's what the stock market is. So are they in some way one and the same? So we see people freaking out. Well, that's going to have an effect on the data, and we need to justify our decisions based on both. So it's a bit tough, right? Like, everyone's freaking out. So maybe, we've seen the stock market affected. We're probably, realistically, I would think that we're going to see a delayed effect on the real estate market, and I would expect the values would have to drop based on just sheer friction in terms of closing on a deal right now. It's harder. If things are harder, and in terms of financing, in terms of walkthroughs, in terms of getting units vacant, all sorts of things, we'd have to expect values to be affected based on just the friction involved in purchasing a property right now.
Mm-hmm. Yeah, I definitely understand that perspective. And I think it's really important that people, again, like, focus on whatever data you think is indicative, right? So like the data that I'm really dialed in on these days is just looking at the daily sales here in our market in London, Ontario, where both Kellen and I exclusively invest, right? You don't own anything out of London yet?
No, everything's within a 2-minute drive still.
Yeah. And so I'm definitely still London based as well. So every single day I'm getting my comp realtor, Jeff Weibo, to send me the daily sales, checking them out. Here in London, I've actually been surprised by how robust our real estate market appears to be still. So 2 weeks ago, it literally was business as usual. Properties were selling at asking or above asking consistently. Now we're starting to see a little bit of a softening where properties are selling at asking or just a hair below. So still, I haven't really noticed much beyond maybe the occasional, 2, 3, 5% discount below asking, which again is night and day difference than where we necessarily were a month or two ago, at least based in Southwestern Ontario's real estate market. So it is interesting. I'm constantly trying to stay on top of the information. The one thing that's been really interesting to me is how fast a lot of large multifamilies are moving these days, even during COVID. So after like quarantine and self-isolating became a thing, we actually had that property. It was a 17-unit apartment building on Gray Street in Soho, which is one of Kellen's main neighborhoods he invests in. And in fact, I think you got a property not far from it. But
I didn't know you bought that.
No,
okay.
I didn't buy it, but
I was looking at that. I was like, that building's interesting. I was like, but I would have to go in at like $500,000 under asking, and then it sells for asking. And I was like, oh, okay, that's where we're at still, eh?
This property was listed for I forget. I think it worked out to $157,000 a unit approximately. Yeah. Half the units were fixed up. Half the units were kind of market rent. The other half still under market, and it sold for asking in under a week. And then recently there was that apartment building on Baseline that was listed as well. And it sold conditionally, again, at asking, is at least the rumor I've heard. And that was looking around the 160 a unit as well. So it's really, or I think maybe it was 150 a unit, but like somewhere in that range. Mm-hmm. And it's really fascinating to me to see that there's still a lot of big money, at least currently, coming into London and scooping up any multifamily that gets listed on the MLS.
I think that part of the reason, I think a lot of this is more psychological than we might expect it to be. So like, why are these properties selling like that? Well, we have a buyer and we have investors, possibly money partners behind them. So where's the investor's mindset at? Well, maybe it's in the same place. Maybe they just have big balls, and we've seen enough investors like that. Maybe nothing in their mind has changed. So they're going to go forward as if business is as usual, right? As if nothing has changed. And then their investors, they trust their buyer or they trust the active partner in the deal. And the active partner is still saying, let's go forward. Then they just still hand their money over as per usual. And I don't know, like, I think it's just in terms of where these buyers' heads are at. But I think that I can't imagine how things wouldn't at least slowly start changing as things, money partners are also probably happy to be, getting better returns than they'd get in the stock market right now too. Yeah. So like in some ways, real estate investors have an even stronger pitch because look, real estate hasn't gone down. Well, it hasn't gone down yet. We know the stock market reacts first, but So they still have a strong pitch because we haven't seen values really affected yet.
Yeah, and I think that's a great way to kind of bring attention to it. Right now, money itself is really confused. It doesn't know whether it's coming or going.
Yeah.
People just know that sitting on money over an extended period of time is, unproductive.
Cashflow Tribe.
Hey YouTube, have you checked out Cashflow Tribe yet? It doesn't matter whether you're an experienced, seasoned investor or brand new to the game. I can probably predict if you're currently not having the level of success you want as a real estate investor, it's due to one thing. That one thing is you're not making enough offers, plain and simple. You need to be making more offers as a real estate investor if you want to hit those big, audacious goals that you're setting for yourself. So here's the deal. Cashflow Tribe, that's the community that myself and Ben were making together. And so Ben's actually so busy trying to provide value to you guys that he had to take off there. But here's the deal. Cashflow Tribe is really a one-of-a-kind community focused on results. That's the difference between us and everyone else. We want to get you guys those results. I'm tired of seeing people commenting on my YouTube channel for 2-3 years now, but they're not making offers. What's holding you back? I'm going to guess that it's either a lack of confidence or a lack of competence. And we cover both of those things in Cashflow Tribe. So here's what I'm going to do. I'm going to make you guys a 14-day free trial offer. You can join Cashflow Tribe completely free, get to test it out. If you like it, great, stay and pay. If you don't, well, I hope you at least find one great idea that you can take away and use to start making more offers, gain more deals, and finally start making the money related to real estate investing that's probably why you're watching my YouTube channel. So let's do this, guys. Let's make 2020 your year.
Cashflow Tribe.
Real estate investors have an even stronger pitch because look, real estate hasn't gone down. Well, it hasn't gone down yet. We know the stock market reacts first, but so I mean, they still have a strong pitch because we haven't seen values really affected yet.
Yeah, and I think that's a great way to kind of bring attention to it. Right now, money itself is really confused. It doesn't know whether it's coming or going.
Yeah.
People just know that sitting on money over an extended period of time is, unproductive. So like,
especially during hyperinflation, right?
Right, which we definitely could be on the cusp of.
Yeah.
So it is really important to have that data, try and have a plan and understand what your big goal is as well. I think that's one of the big struggles I see with new investors all the time is that they're constantly turning to me or probably to yourself as well, Kellen, saying, is this a deal? And always my number one question is, what are you trying to accomplish?
Yeah.
Because that's the only way I can really tell you whether it's a deal or not. Because like the properties I'm taking down, Kellen might think I'm crazy for buying them. The properties Kellen's buying, maybe I think that he's crazy for buying them. The properties that someone brand new to the game getting into their first house hack duplex might be a great deal for them, but Kellen and I, we're probably past that point in our investing career. So talking about deal analysis and just all that, let's dive right into it. So I'm going to pull up a screen share here. And literally, guys, just for the record, this is completely unscripted, unplanned. So I have not looked on realtor.ca in a little bit, so I don't even really know what we're going to see for properties available, but we'll figure it out together.
Yeah, and I'll look on my screen as well, see if I can find anything that seems interesting. I saw one pop up recently that does seem interesting, that I can always pass along.
So for what I'm going to do here, guys, I just want to show you exactly even how to use realtor.ca in case you've never really took it upon yourself. Literally just type it in my city. And then if I hit search, it's going to come up with a nice little map that's going to show every property listed currently for sale in London, Ontario, and the outlying region. You should be able to see this here on your screen, right? Yeah, perfect. And now what I'm going to do is actually add a filter to it. So what I want to look at is really just multifamily properties. I'm not really interested in flipping anything right now. Not to say that you guys shouldn't be. I think that there's still great opportunities in entry-level flips. I would just want to stay away from high-end speculative luxury properties, right? Anything over $1 million, I wouldn't be interested in touching with a 10-foot pole right now in London, Ontario. But that's just me and my risk profile. Again,
well, we've seen like that. I mean, even before all the COVID stuff, we saw values being affected on the high end of things, like generally less people going way over asking. So, I mean, I would imagine it's just going to get affected even harder. Like the super high end stuff is probably going to get hit first.
Yeah, at least traditionally in most markets, that seems to be the way it plays out. So I don't see why we'd expect it to be different. So as you guys can see, all I really did then to change things was just added my filter for multifamily. So that's what I selected there. And boom, now we can see we've got about 36 listings here in London, Ontario, all the way from 210,000 a unit going up as high as 4.9 million. So this is that baseline property, actually, guys, I was talking about. So this one has been conditionally sold, and we can see that was for 3.6 million, 23 a unit.
It's back on the market as of 48 minutes ago. Just so you know, I just got an email. Yeah.
Kellen's really up to the moment on his data. He's leaving the drama at the door. So something must have fallen through. I wouldn't be surprised if it either was an issue with getting an appraiser in or potentially an issue with getting financing. So yeah,
I know right now, like in terms of like that property that I was looking to buy, it was technically a commercial property, like large residential. And the plan was actually for the appraiser to just do a drive-by, and I provided photos of the inside. So there are ways that appraisers are adapting right now. So I'm not sure what would happen on a building that's like 23 units or whatever this one is, but
I can tell you what would happen, because we were going through the process. We were conditional on a 31 res, 1 commercial unit building, and COVID-19 hit. We hadn't got our appraisal done yet. Reached out to a couple different firms. I think originally 1 or 2 weren't interested in doing it. We finally found one that had actually done an appraisal there about 7 years ago. So we were able to kind of confirm with them like what had changed. You know, the owner could go in and just take a few select photos rather than a bunch of work. And the owner was able to just kind of confirm that there's been no dramatic changes since they bought it.
Beautiful.
So again, to me, this is one of those problems or profits moments, guys, where like, you know, you can hit a lot of roadblocks during this quarantine self-isolation with all this fear and uncertainty and volatility. You're gonna hit a lot of roadblocks, but it's up to you to decide whether that's going to stop you or whether you're just going to find a solution to that problem.
I think like right now, for me, I would just need to get into the basement of a property. I mean, if they have photos of the inside of the unit and I can see the basement, then that might be enough for me if the property is good enough price, right? So we don't need to bother anybody. There's no one living in an unfinished basement, at least. So, I mean, that might be just a workaround for people right now. Get into the basement, ask for photos of the inside, and that might be enough to get you comfortable with buying the place. You can see, you know, the electrical, the plumbing, the foundation, the joists, and kind of see structure is good, and that might be enough for you.
Yeah, absolutely. Especially when we're looking at, you know, like small multifamily properties that have that unfinished basement. The entire property guts are in that basement there. That's where really all the mechanical is. It's really what's going to show you what's all going on. So even like a building like this, for example, on baseline, realistically for an appraiser, they probably can still come in, walk the halls without really any issue. They can probably get into the mechanical rooms without having to deal with another person. And then if there happens to be one vacant unit, they can get in there, get a sample of what the layout and kind of what things look like. And it's really not that difficult per se for them to get a really good feel, because it's important to understand, even when COVID-19 wasn't a thing, it would be very unusual for an appraiser to go into every apartment in a large multifamily building. They're probably going to ask to see maybe 3, maybe a handful more than 3. But in general, I think 3 usually is adequate. And then some of the common areas and some of the mechanical rooms, and that'll usually suffice.
Yeah, which is great. I mean, the fact that with commercial stuff, A, you can hire your own appraiser, and B, you don't have to show them all the units. Means you can not show them the worst units, you know, and you can pick someone that you think is going to be trustworthy and realistic about the value, and not someone who's going to be a bit of a hard ass.
Yeah, absolutely. So again, I haven't really been looking on the low end of the market here, guys. So I'm just going to pick a property relatively arbitrarily. I'm going to pick one that's under 400,000 because I know there's a lot of people that like that price range that follow my content. So I don't know. I kind of saw this property on Adelaide. I don't know much about it. Let's check it out. So this house would be perfect, Kellen, if you've been just dying to start your own fraternity. So this is really cool to get all this information, but immediately it starts making Matt scared. Because this sounds like this could be a historic property. This sounds like someone that's even positioning it as a property that maybe should have a historic designation. Another thing that we can do as well that I find a lot of people aren't familiar with is we can actually go back in time. And so we can go as far back as 2011, or we can go up to 2019.
How do you do all that? And like, no one knows how to do all of those things. Very few people know how to do all of the steps involved in that. So you hire the people that do. If there's something you're not good at, hire it out.
All right, so that's part one. This ended up being a really long conversation and process for myself and Kellen to analyze. We actually just looked at 2 deals during this full 1 hour just deep dive into looking at deals virtually. But in part 2, we're actually going to really dive deep into the numbers. We're going to get into the nitty gritty on a deal that I looked at. And then in part 3, we're going to dive into a deal that Kellen wanted to look at. I think this is a fantastic just kind of, glimpse behind the curtain into what's going on in our heads when we're looking at potential real estate deals. If you want more great videos with Kellen, make sure you check out this playlist right here, or if you just want general great real estate information, check out these videos down here. Until next time, smash that like button, hit the subscribe button if you're new to my channel, and I'll see you in the next video.